Hey, good morning, everyone. Morning. It is Tuesday, July 11th. Hope everyone is doing well. Yesterday, pretty good day, right? We were looking for some of that long side. Long side opened up, and today we're going to be breaking down not only a trading plan, but what is going on with the news, how we can perceive this next move in the markets, so on and so forth. So, the main thing that we got to talk about is the tech market, right? Tech market, once we called them FANG, right? We had Facebook, Amazon, Apple, Netflix, Google. Now we have Mama, we have Meta, Alphabet. What was the other one? What was the other M? Microsoft, Apple, and Amazon, right? So, Mama. This was we saw another evolution of that. We now have Tesla included. We have Nvidia included, right? We have a plethora of these massive tech names. Um, or whatever they were called, right? Following the massive tech rally in 2023, helped by an AI craze, some of the financial world's benchmarks are now upending their diversification rules, right? Resulting in a profound impact for countless investing products and the hundreds of billions of dollars that were linked to them. So the NASDAQ 100 NDX, the go-to index for mainly growth slash tech names, is up about 40% year to date compared to 15% gains in the S&P. The power behind the bull market that resumed in March is being led obviously by these quote unquote magnificent seven, right? And their massive performances. Google or Alphabet is up 31%, Microsoft up nearly 40, Amazon up 48, Apple up 51, Meta up 136%, Tesla up 149%, Nvidia up 195% all year to date. Massive upside in these tech names. Now, off the back of that, a lot of people could have seen this coming because as inflation drops, these mega cap tech names are going to surge. A lot of people are calling this rally a tech driven rally rather than a newer bull market. But you have to take a look at what is underneath all of this, right? You're starting to see that money's flowing into small caps and other sectors from tech, right? Tech is getting pulled out in the coming weeks, and you're going to see that money start flowing into especially small caps. The thing with small caps is that when small caps do well and they surge, that's generally good economically, right? We have some strength in that. Stress tests have been run in banks, right? Surviving XYZ recession fairly easily. We've seen that all the recessions that people were looking for, the earnings recession, the rate recession, whatever the case, is getting blown apart. And no matter how high these rates go, the market is still holding out. So call it what you will, a tech run or whatever it is, a new bull market. I think that a lot of people have to realize that you're not probably going to see the 3000s in the S&P anytime soon. So we still have overconcentration in the NASDAQ, which reveals in these very heavyweight stocks, forcing the index to pull the trigger. Unlike a reconstitution where stocks are removed or added, a rebalancing changes the weight of the index and their stock component percentages. So the NASDAQ has only conducted a special rebalance twice in the past, one in December 1998 and one in May 2011. The rule states that action will be taken if the aggregate total of all stocks with individual weights above 4.5% in the index exceeds 48%. Currently, these quote unquote magnificent seven stocks account for about 55% of the total weight of the NASDAQ 100. 55, that's more than half, obviously. Apple exceeds a $3 trillion market cap, which obviously has helped this. And the rebalancing changes will be announced July 14th and will be effective before the market opens on July 24th. So keep an eye on the ETFs like Triple Qs, Pro Shares Ultra Pro Triple Q ETF, TQQQ, as well as positioning that could occur beforehand. So we saw a very strong divergence in tech names yesterday where the tech market sold off with QQQs and individual tech names. I think this could be the start of that tech rebalancing as well, where some money starts flowing out of tech and into some other things like small caps and whatnot. So if you guys are correlation traders, I'd be very cautious with big tech over the next few weeks, considering the information that we have just received, right? So keep that in. We also have Meta's Threads, right? Threads is off to a fast start, crossing 100 million users in less than a week after its launch, as it quickly catches up to Twitter's roughly 240 million active daily users. The figure excludes Europe, obviously, where I am, because I haven't seen a freaking thread yet. But we'll see, right? I don't know what it's like. I have no idea. It doesn't look very cool, anyways, but I'll give it a shot. Where threads, they haven't been launched due to data regulation concerns. That's mostly organic demand, and we haven't even turned off any promotions yet, said Meta CEO Mark Zuckerberg in a post. Evercore ISI also believes that threads present a significant revenue opportunity over the next few years, adding that Twitter's turbulent execution has opened up an opportunity for a competitor app. Ever since Elon took it over, we'll see. It just seems like another copy of Twitter that I don't think looks very cool just yet. I haven't seen it really, but I've seen people post about it. Let me know what your thoughts. What do you think about threads if you've used them so far? Another thing to talk about are capital requirements. Fed Vice Chair for Supervision Michael Barr has laid out and set of proposals to address the recent bank failures and to bolster the financial system with stronger capital requirements. His plans include updating standards for risk-based requirements for big lenders and improving bank stress testing. So these changes would increase bank capital requirements overall, but I want to emphasize that they would principally raise capital requirements for the largest, most complex banks. That's what he said. I expect to have more to say on these topics in the coming months. Excuse me. In the Fed's 2023 stress test, all 23 banks met minimum requirements under the hypothetical recession, confirming that the banking system remains resilient and strong. So today, not much news. Pretty much all assets across the board are up based on what I'm looking at right now, except for London, apparently down 0.1%. I haven't checked it since. When we talk about the stock market and the breakdown of the S&P 500 futures, my plan for today before we jump in the live room, we're through a few of the resistance points that were plaguing the market even yesterday and a few days ago, but we're now back above that 44.44. 44.44 to 44.42. I think that is a very, very final area of support for the prices to pull down to and actually hold. That's what I'm going to be watching for today. I understand it's a fairly significant drop, but it's the top of this more immediate distribution area. I think the last chance is 44.30, 44.32 for the longs to hold out. This was close to yesterday's lows, but I don't want to see price down there again. I just want to see price sustain that low 40, if anything. Aggressive longs come out at that 50 to 52. That's an area that we have to see. But so far, as it stands right now, about 20 minutes into the open, we have a lot of volume that's shaping up at these highs, which in my mind would result in some kind of pullback before we see that continued upside. I am still looking bullish, especially into CPI, which comes out tomorrow, that we're going to be trading with our live trading room. But other than that, we have the first resistance at 44.60, and then above that at 44.68. We start the distribution block to the upside, which I expect to see some buyers. If we manage to leap above that level, really, really get excited, that can push us towards that 4,500. Now, I don't know if it happens today, right? A 50-point move in a day right before the CPI, fairly unlikely. I do expect a little slowdown into tomorrow's data, right? Especially into the afternoon session. So I want to be on the front of trading 1-2 different trades today and then just letting it go. But with that being said, I hope everyone has an amazing Tuesday and is ready and keeping some powder dry for tomorrow's CPI report, which the report itself, maybe you're not going to trade it, but I think the day in itself is going to present some opportunity. So I'm going to open up the live trading room. I hope you guys are there, and check out our free futures course on our website. You can go and check that out, 100% free. It offers a lot of insight on distribution theory and how to trade order flow. And I'll see you guys around. So thank you and take care. Let's chat tomorrow. Thanks, guys.